Hey Michiel, good to see you again. I want to talk a little bit about a city that we've started to talk about more recently, and I think everyone knows that there's a strong correlation between population growth and capital value growth of real estate. And in that context, Phoenix is an obvious contender for potential properties because by some measures it's had the fastest growth in population for the last 50 years, both in absolute terms and also per capita terms. And we've already done quite a few deals in Atlanta, and we can talk about that at some stage, but Houston's come up on the radar recently. Let's go through the process of how we decide whether or not even to invest in Houston.
No, welcome here in our office, Dolph, again. From our perspective, we have started first of all on a macro trend level, and we've identified the trend of that investing in medical sector of real estate would give us a long-term above average. We have referenced various research in this regard, and the graphs that I'm showing you here is referencing to the DL Piper reports, and for 2 years in a row, 2013 and 2014, have indicated, meaning the most probability for best investment opportunities has been indicated in the healthcare sector.
So it's been number one in both years.
Yeah.
And it also makes intuitive sense, right?
Correct.
Because when you think about it, the population, certainly in the Western world, is graying, meaning the proportion of elderly is increasing. Population as a whole is still increasing, but the proportion of elderly is increasing. So we're going to need more healthcare facilities, retirement home, assisted living facilities, rest cares, things like that.
We started off, as you know, in Atlanta. So what we're looking for now is additional opportunities. So our natural question was, where are the medical centers in the United States?
Okay.
And to this end, our research indicated that Houston actually has the largest medical center university campuses in the United States. So as it would have in our July trip last year, we actually were physically in Houston, and we started talking with all the relevant players. We were completely amazed with the size and the sheer magnitude of, first of all, the amount of universities, the amount of research centers, and the amount of hospitals, basically just south of the city center in Houston. So from that perspective, we started now our traditional or our investigation into the city. We always try to find a trusted partner in the local city so that we can use their market knowledge. We are obviously now just a little bit worried that Houston is the energy center of the world,
right?
And we all know what happened with the oil price.
Right, they've been decimated, right?
Yes.
They've almost halved. In some cases they have halved. So how do we go through the process of finding out to what extent Houston is dependent on the oil industry?
Yeah, Dolph, to that degree, we have also, like property partners, we have also analyst partners, and we actually met with the analyst now twice already, and the analyst got briefed to ask us now, or we asked him for a very specific question now. Please look at the Houston market from a medical point of view and see to what degree the oil price would have had now an influence on that, and does it make sense to continue?
Right.
Because we really like this trend and this sector in terms of medical real estate.
Right. So a lot of it has to do with beating the average. We want to beat the average across those sectors, and medical is an obvious one where you can beat the average. But it's not enough just to buy into the healthcare industry. You've got to have a right geographic location. So we want cities that can beat the average. And even when it comes to a city level, we want suburbs within those cities that for whatever valid reason can beat the city average. And what we find is when you can beat the average on 3 or 4 fronts simultaneously, and then the effects, the benefits compound each other, and you can have an investment that does way better than average.
No, that is 100% correct. Classic example of that is Atlanta. Atlanta, why we are still one of our favorites is that it has now been certified as the busiest airport in the world. So from that perspective, that means there's a lot of people coming in there, and because of the easy international access, especially for international companies, a lot of large Fortune 500 countries are putting their headquarters in Atlanta so that they can run their global operations from there. As a result, the population growth of Atlanta is significant for the last 10 years, and it's continuing to grow. So that means from our perspective, that's number one tick for us. The second tick for us is we've seen, as we have had Henny Besaidena, our chairman, at the MIPIM, the World Conference on Property and Property Developments. One of the second largest trend is that they would also like to be in cities which has a lot of logistics. And the fact that the airport is so busy and it's such a hub means that that encourage additional businesses. And then, of course, in our case, the additional business spin-offs that we get from that we actually get international patients coming into Atlanta to be addressed by the specialist hospitals.
So this concept of medical tourism.
Correct, yeah, and that's a very interesting concept, and we found and confirmed similar in Houston. As you know, there's I think it is the George Bush airport there, a very large international airport, and similarly in that case, there's some of very specialized care, specifically spinal and cancer care.
Mm-hmm. Wow. So again, it goes to show we have to do research, long-term research that uses all those indicators to decide what's a good city and a good sector and how can we beat the average. But also something that comes into play is when circumstances change, which invariably they do through some kind of catastrophe. It might be an earthquake or a hurricane or something, or in this case the price of oil being decimated, which no one expected. Then we have to modify our strategy and ride out the storm, so to speak.